Hi, some people ask, why should I invest in stocks myself when we have mutual funds, right? Many people prefer to invest in stocks through mutual funds. So in this video, I'm going to address this topic, why you should be investing yourself than going through a mutual fund. So mutual fund is basically for those people who do not want the hassle at all of managing their stock portfolio, okay? It's basically a very passive way of investment into the stock market where you give your hard earned money to a mutual fund house which manages the money on your behalf, right? So what essentially happens, you tend to become careless over a period of time because you have given it to a fund house and that fund house is managing it, right? So you stop taking care of your money as you should be doing, right? So what essentially happens, you become careless, right? And what exactly happens when you give to mutual fund houses and you want to manage it on your own? There are certain drawbacks, right, which I'm going to tell you. So the number one drawback is you cannot invest in this. You cannot invest and take out your money as per your wish, right? Once you give it to you, the mutual fund house, there is very little flexibility given to you to take out or invest more into the fund into that particular fund, right? There is little flexibility to you, right? The second thing is most of the mutual fund houses, they give less than average return from the market standards, right? So even though the return from a mutual fund is normally higher than a bank interest rate, but still it is not what you would get if you manage it yourself, right? And the third and the biggest drawback which I see in mutual fund is you do not have enough say to invest in certain stocks. I mean, you cannot decide in which particular companies your mutual fund house is going to invest your money, right? So let's say you have an interest toward technology stocks, right? But your mutual fund is not that much into those technology stocks and it is focused on some other industry, right? So in that case, you have very little say in which industry or in which companies your hard earned money should go in, right? Because if you know that this particular company or this particular industry is going to do very well in future, then you must invest in that company. If you are choosing mutual fund to do that for you, then you have very little option, right? So these are some of the reasons because of which I suggest everyone to learn stock trading and stock investment themselves than depending on the mutual funds. It is a very passive way of investment and you tend to become careless, as I said, over a period of time. So I don't want you to become careless. I want you to be careful with your money so that it grows over a period of time. All right. So I hope you found value in this video. If you found value in this video, do not miss my webinar on how you can be a lazy investor, where I'll show you tricks how you can invest into the stock market without investing a lot of time and energy into it. All right. So see you soon in that. Till then, take care. Bye bye.